What does that do for Bitcoin? It explodes it higher. So the first order effect is, oh my God, Bitcoin's going lower. But everybody should be thinking, if this happens, then this is what's going to drive it to 200,000. Everybody was like, no, this is going to be inflation forever, growth forever. I think, same as every time I've ever seen, it will slow down first and give us a scare. And we might even see one of the emerging markets blow up. That's usually what happens in the latter phases. So I was waiting for the macro to meet this crypto market, where it became obvious to everybody that crypto offered a big solution. Because people didn't get it for a long time. But the moment it happened, everyone suddenly realized, oh my God, this is going to offer a lot of answers. In a debt-laden society, everybody owes everybody money. And when things go wrong, you don't know who owes what to whom. And that's what happened with Lehman Brothers and many of these other things, is we don't know who owed what, because there's daisy chains of all of this debt. Blockchain solves that. You know immediately who's the owner of the asset. Also, it gets around a lot of other legacy financial problems. You know, ownership is one. There's problems within custody, within the deep hearts of the plumbing of the financial system, that if somebody defaults, almost everything blows up. And blockchain solves that again because of this ownership issue. Every single recession since 1962 has seen exactly the same thing. Bond yields, as soon as you come out of the recession, everyone goes, oh my God, inflation. Bond yields go up. And then what happens is the stimulus that the government and the central bank has put in during the recession starts wearing off. And bond yields fall because growth starts slowing down again. And every single time, the central bank has had to stimulate 2 or more times after the recession to find the natural rate of growth, because all this stimulus keeps coming in and then coming off. The government usually stimulates again a couple of times until the economy gets its traction. So this would be really normal. Now, most of the time, bond yields go back to the all-time low. So if we repeat the past, we'd see bond yields go to zero, 10-year bonds go to zero. I don't think that's going to happen this time. I don't know. Bitcoin has these 2 attributes. One is this store of value. So it's like gold because it's a scarce asset, like artwork and other things, real estate. But it has this other thing, which is this call option on the future. What could it be? What could it be used for? What could this technology be used for? And that's really the network effect that is Bitcoin. So if it really was going to be a store of value and the central banks were printing an unprecedented amount of money, then like equity prices, real estate prices, gold prices, it should go up in value. But it should go up a lot more because it has this call option on a potential future financial system too. But there's a lot of stimulus rolling off. We've just had a massive spike in house prices, a massive spike in the cost of food and fuel, and all these supply disruptions. So real wages have stayed flat. Well, they've actually gone negative, but wages have stayed the same, while costs have gone up and mortgage rates went up. And usually that slows things down already because wages haven't gone up en masse because so many people are still unemployed. And then after that, you've got the roll off of the stimulus. So I think that we're going to see, everybody was like, no, this is going to be inflation forever, growth forever. I think, same as every time I've ever seen, it will slow down first and give us a scare. And we might even see one of the emerging markets blow up. That's usually what happens in the latter phases. It was after 2008, really, it ended up being Europe. In 2012, took a while, but it was creaking at the seams. After 2001 recession, it was Brazil and Argentina. So that's usually how it goes. And I don't expect it to play out differently. Yes, my target still remains between 200 and 400,000. I think this cycle extends somewhat, so I'll give it the next 12 months. It's not a bubble if you look at it in the right terms. So I stumbled across this gold is the great price anchor, right? Everyone's used gold as a relative asset pricing forever as a system of money. Real estate versus gold is about in line. So it's kind of at fair value. Equities versus gold, pretty much at fair value. So then it makes you think, well, why are we thinking everything's a bubble? And then I realized what was going on is that the central bank printing was devaluing the purchasing power of fiat currency, but against these rare fixed assets, and only against those, and not against wages and not against earnings. So think that through. Price of an equity goes up because equities are rare assets. Earnings don't go up. So I just saw today, Microsoft over the last 5 years, or whatever the number is, has gone up. Their earnings have gone up 50%. Their price has gone up 400%. This is to do with the balance sheet and the devaluing of money. That's why people feel poorer, because wages aren't going up at the same rate, but the balance sheet is inflating these assets so you can buy less of them. Okay, so first order thinking is, oh my God, assets are going to sell off. This is terrible for crypto. Look at March 2020, oh my God. What you should be thinking is, what was the outcome of March 2020? Massive central bank stimulus and government stimulus on a scale of which we've never seen in our lives before. So let's say there is a risk off. Okay, it's not as big as March 2020. Maybe Bitcoin goes back down, breaks a new low of this move and gets to 27,000, whatever it is. And let's say equities are down 10 or 15%. And the dollar's going higher, a lot higher, and that's making the markets feel uncomfortable. And we start to see the data slow down. What is the outcome? The outcome is exactly the same. The central bank will stimulate more, and the government will try and push through an even bigger stimulus package. What does that do for Bitcoin? It explodes it higher. So the first order effect is, oh my God, Bitcoin's going lower, but everybody should be thinking, if this happens, then this is what's going to drive it to 200,000. So how does this continue? Well, firstly, we've done the right thing, which is build a parallel financial system with parallel assets that actually keep pace with this. Good, because if we hadn't have done that, we're in bigger trouble. So that is our answer. Then how do you transition off this slowly? Well, it's slowly, and then all at once, the migration moves. So will eventually all of this debt be devalued down to nothing? Probably. Will we have to use a different currency system? Potentially. But I think it just continues, and more people become aware of it, and therefore more and more people opt out of it. I think it's a slow process. I thought it was, all of us in the macro world thought it was going to end with a bang. And this last recession proved to me it's not going to end with a bang. It's going to end with a whimper. It's going to we're all going to move over there, and then we're going to be immune to it.